Let's dive into the world of tax deductions. One of the key decisions you'll face when filing your taxes is choosing between the standard deduction and itemized deductions. This choice can significantly impact your taxable income and the amount of tax you owe. One of the most important decisions you'll make when filing your taxes is whether to take the standard deduction or itemized deductions. This choice can significantly impact your taxable income and the amount of tax you owe. While the standard deduction provides a simple way to lower your taxable income, itemizing allows you to deduct specific expenses. Understanding the differences between these options will help you make the best choice for your financial situation. What is the standard deduction? The standard deduction is a fixed amount that the IRS allows taxpayers to subtract from their taxable income. It is available to all filers and does not require tracking expenses or keeping receipts. The IRS adjusts this deduction amount annually based on inflation. It's the most commonly used deduction method because it simplifies the tax filing process and benefits most taxpayers. Benefits of taking the standard deduction: easy to claim, no need to track receipts or list individual deductions, less risk of an audit. Itemizing deductions requires detailed documentation, which can increase audit risks. Higher deduction for many. The standard deduction amount is often more than what some taxpayers can claim through itemizing. Additional benefits for seniors. If you are 65 or older, you may qualify for a higher standard deduction. The standard deduction is the preferred choice for many taxpayers, but some may save more by itemizing deductions. What are itemized deductions? Itemizing deductions allows you to subtract specific eligible expenses from your taxable income. This option is beneficial if the total amount of your itemized deductions exceeds the standard deduction. To itemize, you must maintain receipts and proper records to justify your claims. Some of the most common itemized deductions include mortgage interest. Homeowners can deduct interest paid on a qualifying mortgage. State and local taxes. You may deduct a portion of state and local income, property, or sales taxes. Medical expenses. Out-of-pocket medical and dental expenses that exceed a certain percentage of your income may be deductible. Charitable donations. Cash and non-cash donations to qualifying charities can be deducted. Investment interest. Interest paid on loans used for investment purposes may be deductible. Itemizing deductions requires more effort and documentation but can lead to greater tax savings if you have significant qualifying expenses. Benefits of itemizing deductions: maximizes tax savings for certain taxpayers. If your total deductions exceed the standard deduction, you'll pay less in taxes. Ideal for homeowners. Mortgage interest and property tax deductions can significantly reduce taxable income. Best for those with high medical expenses. If you have significant out-of-pocket medical costs, itemizing may offer greater benefits. Useful for generous donors. Charitable contributions can add up and increase your tax savings. Choosing to itemize can be beneficial, but it requires detailed record keeping and additional paperwork. How to decide which deduction to take. When to take the standard deduction. You don't have significant deductible expenses such as mortgage interest or high medical bills. Your total eligible deductions are lower than the standard deduction amount. You want a simpler filing process with fewer record-keeping requirements. When should you itemize deductions? Well, if you own a home and pay significant mortgage interest and property taxes, it might be worth considering. Also, if you have large medical or dental expenses that exceed a certain percentage of your income, itemizing could be beneficial. If you make substantial charitable contributions throughout the year, itemizing can help you maximize those deductions. Additionally, if you have high state and local tax payments that exceed the deduction limit, itemizing might be the way to go. If your total itemized deductions are greater than the standard deduction, you'll benefit more by itemizing. However, if your expenses do not add up to more than the standard deduction, taking the standard deduction is the better option. For most taxpayers, the standard deduction is the best choice because it simplifies the filing process and often provides a higher deduction. However, if you have significant deductible expenses, itemizing may lower your tax bill even more. If you're unsure which option to choose, a tax professional can help analyze your financial situation and ensure you're maximizing your tax savings. Let SK Tax Associates help you maximize your tax savings. At SK Tax Associates, our experts can help you determine whether to take the standard deduction or itemize to get the best possible tax outcome. Contact us today for personalized tax guidance and ensure you're making the right financial decision. Save more, stress less, let SK Tax Associates handle your taxes.